Welcome to another session of Business Startup Training. Today we'll be looking at the petty cash management. Sure, you're gonna like this one. But like, share, subscribe. As you know, it's presented by Accounting Lecture. So, what are our objectives? So we're gonna look at the opening balance and the closing balance. Then we move on to the financial report and financial notes. Then we move on to Microsoft and the cash book. Then we move on to the cash box and Microsoft in terms of Microsoft Excel of the cash book, which we know, as I said before, is going to be demonstrating the cash book. And then we move on to the balance sheet or the statement of financial position and the impact of it. And then we do some additional information as well. Now, in terms of the opening balances, now opening balance we know is very, very important. We need to know what the balance is at the very beginning of the period, which is the very beginning of the day, the very beginning of the week, the very beginning of the month, or the very beginning of the year. Balances are a critical part of accounting in any way, okay? Now, we also need to consider the closing balance, which is the balance at the end of the period, which would be the end of the day, the end of the week, the end of the month, or the end of the year. And here in this example, the opening balance is 2,000. So £2,000, and that which was spent is on stationery of 200 and travel of 100. So the closing balance is £1,700. Okay, so again, we have the two critical information: opening, which is 2,000, and closing, which is 1,700. Now we need to look at further explanation of what the content of this is. So we mentioned earlier that the opening was 2,000, and that which was spent was on travel and stationery, or stationery and travel, whichever you say, which is 200 and 100, and the closing balance is 1,700. But we want to know what the breakdown of that 1,700 is. So we need to categorize it in terms of the various coins and notes, or notes and coins. So in terms of the £20 notes, we have 66 of it, so that's 1,320. And in terms of the £10, we have 30, which is 300. And then in terms of the £5 note, we have 10, which is 50. And then in terms of coin, we have £1 coin, we have 10, which gives us 10. Altogether, that's 1,680. Then in 50p, we have 20, which gives us 10. 20p, 15, which gives us 3. 10p is 40, which gives us 4. And 5p is 20, which gives us 1. And then in 2p, it's 50, which gives us 1. And 1p is 100, which gives us 1. If we add that all together, that equals 1,700, which is the 2, the 18, and the 1,680. Now, we need to look at this impact in terms of the Microsoft Excel, which is where the cash book is. Okay, so first of all, if we're going to design this from scratch, we would need to have the various categories. Category number 1 would be the date, then we have the folio, then we have the description, then we have the debits and the credits, and then the running balance. So in the date, we would need to have the opening balance, as we mentioned earlier, which is the very beginning of the period. And here, the brought forward balance, which is the very beginning of the period, is 2,000. And we spent on the 200 in stationery and the travel of 100, so that gives us a closing balance of 1,700. We can have an alternative method of doing this, where instead of just describing it, we have major categories. And the two major categories here, just for example purposes, is stationery and travel. So we can have a little bit more description on what we spent on in terms of office paper. For the 200 is a credit, as well as is in the stationery category. And then the taxi, which is travel, 100, and it's in the travel category. And then we still have the closing balance of 1,700. So these are two different methods of presenting the information. Then it is next important bit of information is what's the balance in the cash box and what's the balance in the cash book. Now, the cash box gives us the various categories in terms of £20 notes, £10 notes, £5 notes, £1 coin, and the various categories as we mentioned earlier. So we would have that, we can count it so we know exactly what it is, and we know it's supposed to be equal to 1,700. But then we also need to have the information in the cash book. And we know we spent on these two items, which is stationery and travel, of 200 and 300 respectively. So we know our closing balance should be 1,700. So once we have them being the same, we know everything is fine. But it is important for us to be able to track the two. And once we have that, we can then look at the difference. So we need to know the difference between the opening balance, which is the 2,000. So it's 2,000, 2,000, so there's no problem. And then the closing balance, which is 1,700, is 1,700 in both books or in both categories. So therefore, we know everything is fine. For reconciliation purposes, it's all good. But there are instances where we'd have the opening being different or the closing being different. And that's where we would need to do an audit to check to make sure why this is the case. Then we can represent this information in the statement of financial position. And in the statement of financial position, the category here is current asset. And we put it at the bottom of the current assets, which would give us a petty cash balance here in this example of 1,700. Okay, so that's. Now we can also look at what is the situation in terms of the accounting software. So we need to transfer this information. Now, in order for us to transfer this information, we need to make sure we have the right categories. So as we mentioned earlier, if we have all stationary items in stationary and we have an aggregate of that, and all travel in travel and we have an aggregate of that, then we can transfer that information into the accounting software. In this instance, is Xero Accounting software, with the aggregate being 200 and 100 respectively, of stationary and then travel. Now, we don't necessarily have a travel category which we could create an accounting code for, but we can put it in the motor vehicle expenses, which is similar to moving around. So we can actually put it in that category. And then the stationary, we have printing and stationary, so we put it in that category. In terms of the impact in the balance sheet, which we mentioned earlier, the statement of financial position, we know the 1,700 should be in where? Should be in current assets, and it should be the last item. Here in this example, we have accounts receivable. There's nothing else in current asset except for accounts receivable, but we can put the petty cash balance of 1,700 just below accounts receivable. Now, we can have a situation where we have a deposit instead of a withdrawal or a spend. So if we had, the management accountant or the accountant giving the petty cashier clerk 500, now we first of all need to know what the opening balance is. So the previous period, the closing balance was 1,700. So this period, the opening balance ought to be 1,700 because that was a closing from the previous period. So the brought forward balance has to be the same. So 1,700 is the opening balance. Now we add an additional 500 to it, and so therefore our closing balance is 2,200. Now we need to represent this information, and we also need to adjust the breakdown, which is the financial notes. So if we're going to do that, we know we had 66 in the category of £20 notes, and so if the cash was given all in £20 notes, then that would be 25, an additional 25. So that's 91 altogether. And so that category would change to 1,820. All the other categories remain the same. So our aggregate is now going to be 2,200. So we can represent this in Microsoft Excel, as we mentioned earlier. And so the Microsoft Excel, opening balance of 1,700, and we add the 500, and so our running balance is 2,200, as we mentioned earlier. It's important to note as well that we can put a reference on that of 1003 because the previous references were 1001 and 1002. So now we can use the next one, which is 1003. And the date here, the opening for the period, which is the first. And so this transaction may occur on that day or another day. And here we put the second being the actual deposit day. The alternative is no different. So 500 again and it's important to note it's on the debit side because debit in this instance is receiving and credit is giving. So when we spend, it's on the credit side. When we're receiving, it's on the debit side. And then we conclude. So we've looked at the opening balances. We've looked at the report and the financial notes. We've looked at Microsoft Excel and the cash book. We've looked at the difference between the cash box and the cash book. We've looked at the balance sheet and the statement of financial position. And we also did some additional information. I think this is quite healthy information. And we've also integrated, Xero Accounting software in terms of how we integrate the connect the software to our petty cash system. I hope you like this. Share it. Subscribe. Thank you.